Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Wednesday, December 20th, 2006, and the S&P 500 on the screen right now. We can see the S&P had a pretty quiet day, actually. They were down 18 cents on the spiders. Still, though, I'm going to reiterate that no damage done to the uptrend, and the more important level of support continues to be found down really between probably about 140.75. I think that's the number that we've been kind of focusing on. So we'll continue to look at 140.75, and that's this 140.75 to 141. It is looking like we've got some lower highs here on the half-hour chart. Yesterday we did have that higher high here, but then now another lower low. So it just looks, it continues to be very mixed, this market. S&P, so nothing's changed there. It's extended on the daily time frame, but it's in an overall uptrend, so no reason to look for tops. Nasdaq 100 continues to trade within the range it's been in for, since we saw these moving averages crisscross back here. That again represents indecision. It means the short-term trend was lower. Now the intermediate-term trend is lower. You can see that 20-day moving average is heading lower. It doesn't mean the market's going to break down. I think it's more likely that we see a quick little shakeout, maybe down to 42.75 or something, and then squeeze the shorts. We'll see. But I'd say more cautious on the Nasdaq than anything else. We look at that half-hour chart, and we continue to see this mess. We've been trading. If we take the range that the market's been in right here and kind of cut it in half, you can see that we've found resistance right around that 44.10 level. So the market's going to have to get back above 44.20 really before we can consider doing any real purchases of this index. I think the trade is, for the indices, basically the trade is probably over for the rest of the year. But there's still some great opportunities in the individual stocks, and that's where you should be focusing your attention, not so much on this choppy action. And this, this daily time frames tells us that it's in a range, so there's really not much edge in trading the Nasdaq 100 and the semiconductors. We've been talking about this range-bound market for quite a while as well. There's really no edge in here either. So there is reason for concern. We've got the 10-day moving average below the 20, which is below the 50. They're all declining, and they're all, the market's been stuck below this 200-day moving average for a little while as well. So that gives us a little bit of reason for concern. You also look at a stock like Google. It should be bouncing, you would think, but it's not. If Google fails in here, then perhaps it's going to come down and fill this gap in. That would do some overall, I think, psychological damage to the market. It might be a catalyst that would drive that Nasdaq down through the support level right here that we've been looking at about $43.30. So keep your eye on Google as well, because that's always a good leading stock. The mid caps, like I said, this area in here, the 148 level, had been resistance. It turned into support over here, and then it broke down through that. This market did test its rising 50-day moving average. Now it's bouncing on less volume, but again, it's probably partially due to holiday trade. Looking at the 30-minute time frame, maybe not. But this is the, that 148.25 or so. That's the area where we would expect to see potential resistance. So if the market can't get back above there and starts breaking back down, then I think we've still got to be, and I've been saying this anyways, that we have to be concerned about these mid caps. Even though it's in a longer term uptrend, it is showing weakness on the intermediate term time frame. Only getting back up above this 148.25 level gives me more confidence that this was just a pullback. So we're not looking for any tops by any means, but just have to be cautious. China Tech, CNTF, this is a stock that we got involved in right over here at the price of $9.50. 3 days ago. We've been raising our stop in there. I think that if you didn't adjust your stop intraday as it took out this high here to under that level, I think that if you're still in the stock, your stop ought to go at about $10.15 right now. And we had a position based on that intraday chart in Apple, and didn't really have an official entry price, but I did say that a stop ought to go at 85.45. So I think that realistically, you probably got involved, let's say 85.80. Right in here. So I could say that it looks like it would have been stopped out for about a 35-cent loss, and that inverted head and shoulders pattern failed. So doesn't look like it's headed for 87.5 yet. We might need to test this low right over here. If we were to see a nice divergence on that MACD, then it might be a good place to look for a bounce. A lot of times the 50-day moving average does act as support, so we'll have to see what happens in Apple, but for now I think sidelines is the best place to be if you're looking at Apple. Adobe, we were looking for a pullback trade in here and then the buy strength. The chart's not pulling up in Adobe, but the trade never triggered anyway, so no reason to look at that one anyway. Endpoint, symbol ENPT, we wanted to buy above 475. I got involved right there. I'm still long this stock. I'm thinking probably 458 is where to raise the stop to in ENPT. We had it at 448, so I want to raise that up by about a dime just to hopefully reduce a little bit of risk. Monster, MNST, the stock we wanted to buy above 46.5, and it got above there and didn't look back, so now it's time to adjust the stop. I would say above, let's say break even in monster.com for our stop right now. We had also looked at OXiGENE, OXGN. The play in here was to buy on strength above $4.95. That never occurred. Keep this one on your radar because I think it could still get going, but no trade in there today. Invitrogen, IVGN, our one lone short sale. What we were looking for in here was a rally to 56.55 and then to sell short. Weakness at 56.45. That did occur. If we look at a shorter term time frame, you can see we had the rally up to 55 cents right here, and then it did come back down to the level that I had suggested a short sale of 45 cents, but it also then went and stopped us out at $45.70. So it should have been stopped out with a 25-cent loss, and taking that 25-cent loss was the right thing to do because the stock ran another 50 cents over the course of the next half hour or so. So small loss taken in Invitrogen. And then finally we had ARQL. The play in here, I told you that I wasn't really going to tell you an exact area because I'm in the stock and I continue to be in the stock. I still think though it really needs to get above that $6.10 level. I think I'd probably add to my position above $6.10.